Hello, everyone, and welcome into crushthestreet.com. I got a cryptocurrency Bitcoin all-star on the line with me. He's been on the show before, met him in person. Great guy, Jimmy Song. He hosts Off-Chain of the Crypto World Network. He's a thought leader in the crypto space, and he's been a timely guest in the past for us here at Crush the Street. He's encouraged us to look into Bitcoin. And, if you would have taken his advice, you'd be up very, very big. He's a Bitcoin developer, an entrepreneur, software developer for 20 years, and the former VP of engineering at Armory, currently principal architect at Paxos, and he's in the process of writing a book at the moment. The date of the release has not been set yet, but it's called Programming Bitcoin for O'Reilly. Jimmy Song, thanks for coming on Crush the Street.
Well, thanks for having me. It's great to be here.
Jimmy, so crypto euphoria in hindsight was November and December of 2017, the last crypto euphoria. And I actually attended the North American Bitcoin Conference in Miami in January. Of course, everyone committed and paid for the event while Bitcoin was essentially hitting 20,000, right? Moving up $1,000 a day. So the event was like a Wolf of Wall Street sort of event. And Dash even sponsored the after party at a strip club, believe it or not. And maybe you saw the Bloomberg article. But man, what crypto euphoria, we saw that in 2017 going into 2018. What are your thoughts in hindsight looking at this and where we are today?
In hindsight, it looks like the market was just a little bit overheated. Probably too many people got into Bitcoin that really didn't understand what it was. Were just kind of getting into it because their friends were into it without actually looking into the technology. And this is common in any sort of market where it's kind of hard to understand what's going on, right? Like it's all good and dandy when it's going up, but as soon as it's coming down, a lot of the same people end up panicking and getting out because they don't actually understand the technology. And this is something that you should be doing with all your investments, not just Bitcoin, but if you're going to invest in gold or stocks or real estate, you should really understand what the value proposition is and have an investment thesis. I don't think a lot of the people that got in towards the end of the year last year were really in that boat. Instead, they just sort of went into it because their friends did, or they thought it was going to keep going up without really understanding what's going on. And that's when you get burned as an investor. You really should know about the underlying technology or whatever it is that gives it value, and then see if that changes. That's when you should sell, is when your investment thesis changes, not when the price happens to go up and down. That's like a lot of people did that in 2011, for example, with Bitcoin. They bought at $1, sold at $2, right? Like, because they were like, whoa, I doubled my money. There you go. And they got out. They missed out on something like 5,000x gains as a result. So, this is the perils of the market. This is normal, and I imagine that's what happened.
Sure. No, absolutely. And it's hard to blame people who were early Bitcoin adopters, who bought at $1 and sold at $10. It's hard to blame somebody who's up 10x on something for selling, and then no one ever died for taking a profit. But in this environment, I'm just wondering how many people bought at the top and are down, 50%. And unfortunately, I think there's some, and even a lot of people who've been in the cryptocurrency market for a while who made some money buying early and then going all in at the top. And I say top, not like where this is the end, but that's just the nature of markets. Markets just know how to wash and rinse people.
Yeah, and if you are sort of panicking at this moment, you probably didn't get in with the right mindset. At least as far as I'm concerned, this is a long-term play, and if you were sort of gambling on it going up in the next 6 months, then this is the sort of volatility you should expect. Over a period of 5 years, 10 years, something like that, I think this investment will do fine. And that's certainly how I view the investment. And a lot of the people that understand this technology, that's how they view the investment. The people that are sort of doing this semi short term, 6 month, investment kind of thing and sort of taking profits whenever, I actually don't want them to be holding Bitcoin because they don't really understand the value and they're the ones that are going to be causing selling pressure later on anyway. So I don't know. At least in my opinion, what's happening is a good thing. You want those weekends to shake out. You want the people that stay to actually know the technology and have a good idea of why it's valuable instead of just sort of doing whatever their friends are doing. And that to me is a good thing.
So what sort of adoption do you see taking place with Bitcoin? I feel like a lot of what we saw last year was driven by a lot of speculation. But what got Bitcoin to where it was positioned in, maybe the end of 2016, 2017, into that hyperbolic move was fundamental adoptions, transactions increasing on a regular basis, and then took it to where it was a mainstream talking point, and Bitcoin did what it did. So going forward here, where do you see the adoption continuing to expand?
Well, the only adoption that I've seen expand the entire time is as a store of value. Most people, talk about price, for example, instead of, what they can buy with Bitcoin. It's what you can buy with Bitcoin is almost always sort of like a thing where a merchant will accept Bitcoin and then they get more sales for like a week and then it like drops off and then they stop taking it again. Like it's medium of exchange just isn't quite as interesting as store of value. That's what most people utilize it for, as a way to keep value free from government inflation or taxes or confiscation. And that's I think what people are going to use it for going forward, because Bitcoin will have value independent of the dollar and a lot of these other types of assets. It's anti-correlated to almost everything. And in that way, it's a nice part of a diversified portfolio. But in another sense, it's also a very good store of value, just independent of anything, period, because it's got a fixed supply. And digital scarcity is something that we really hadn't seen before Bitcoin, at least decentralized digital scarcity. There's been, centralized digital scarcity, but that's subject to the whims of whoever controls the digital item. This is really, restricted by the decentralized nature of it. So in that sense, as people start to understand what Bitcoin is, it's decentralized digital scarcity. I think more and more people will adopt it as a way, as a means of storing value over time, and allowing their whatever they're storing their value in to increase in value, or at least stay the same, instead of sort of having it inflated away from them.
Yes. Jimmy, so do you suspect that crypto will grow, Bitcoin specifically will grow from the outside in or from the inside out? And what I mean by that is Coinbase, for instance, was largely responsible for sparking the fire that burned down the forest and ultimately sent Bitcoin to the moon for, a number of reasons. But Coinbase was the on-ramp for many, many people at the expense of privacy and traditional banking. And I would call that like an inside conventional sort of adoption. But do you think going forward it's going to be conventional means like that add to Bitcoin's use case, or is it going to be like an outside in sort of mentality where people are trying to sidestep the conventional system?
It's a good question. I'm not really sure exactly how people will get into it. It really depends on sort of the regulatory environment around it, and that's really hard to predict. Certainly, Coinbase has been useful to a lot of people. They were at one point like getting thousands of customers every day. So were a lot of these other exchanges just because the demand for Bitcoin was that high. And like I said before, a lot of those people just didn't know what the hell they were getting into. They just sort of went in because they thought it was sort of a new hot investment or their friend told them to do it, and they didn't actually bother looking into what it was about. But regardless of how it happens, I think it does happen. Will it be through Coinbase in particular? I don't know. I have a feeling that there are lots and lots of other competitors that will be coming on board. There's already like the Cash App and obviously other exchanges that have been around a while. Abra, Square Cash, they allow you to buy Bitcoin more or less as conveniently, if not more conveniently, than you can at Coinbase. So, that kind of thing is valuable, having some ease of use. Compared to like 2011 when you had to like open a Dwala account and then transfer money into the Dwala account and then use that to link it to Mt. Gox and then transfer that to Mt. Gox and then, eventually be able to buy it. This is a lot easier. But that said, if you actually know what a good investment is, and if you are convicted in your investment decision, having a few hurdles like bad UX shouldn't really make as much of a difference. So, these are sort of minor points, I think, and really the bigger picture here is that it is becoming more and more of a store of value, especially as Bitcoin lasts longer and longer. And that seems to be what's happening, is that more people are willing to get involved because it's already lasted 9 years. And there's a good chance that it lasts at least 9 more and perhaps a lot more than that.
Jimmy, in a rising tide environment, everyone's flush with cash and happy and making money and things seem optimistic. But I'm wondering what the bear market might look like. And, if people are going to start turning on each other, backstabbing each other, and how bad do you suspect essentially this bear market can be with cryptos pulling back, especially in the ICO world where a lot of companies are running out of cash and, they're going to have to continue to sell Ethereum or cryptocurrencies to raise more money, which perpetuates more selling. And any thoughts on this now that we're not in that 2017 rising tide environment?
Yeah, I've been through a couple of bear markets. 2012 was mostly a bear market. 2014, 15, maybe even parts of 16 were definitely bear markets. And what tends to happen is that a lot of the bad companies sort of run out of money, and like it reveals who the real competent companies are. And the people that survived the last one are a better position, but it's no guarantee that they'll survive this upcoming one if it happens. It's like in any bear market, you tend to get rid of the companies that didn't really provide any value in the first place, and it's a correction, right? And there seems, at least in my analysis, a lot of companies that really aren't providing much, if much at all, to the ecosystem, that have more or less just drained money from the donations that they received in ICOs and things like that. All those companies, I'm sure there will be lots of lawsuits. There will be a lot of selling pressure, especially from these ICOs. How that happens and, exactly when that happens, I can't tell you. But bear markets are kind of inevitable in sort of an overheated environment. Seems like it was overheated at least a little bit. There are a lot of people that are sort of hoping that everything will recover in 6 months. And I think that's kind of like optimistic. And if you're requiring that in order to stay solvent, good luck. I think you should always plan for the worst and try to figure out a way to survive through.
In an April 2nd article that you wrote, you posted on Medium, you articulated why Bitcoin is different. I think that's relevant as we're discussing this environment of possibly a correction here and companies running out of funds. And so what was your main point in that article, and why is Bitcoin different?
Yeah, my main point was that first of all, Bitcoin has the network effect, and the more people have Bitcoin and value Bitcoin, more other people are going to want Bitcoin and value Bitcoin. And that's something that's happened over a period of 9 years. It's called the Lindy effect. Means that it'll last at least 9 more. A lot of these other coins haven't lasted even a year. So you should remain a little bit skeptical of their value proposition when they haven't lasted as long. And the other big property is that Bitcoin is decentralized. There's no central authority like in an ICO, like the central authority is clearly the one that's issuing the token, or even altcoins, because they have a creator that controls things. And you can centralized digital scarcity is nothing new. The U.S. dollar, in a sense, is a digital item. 97% or something like that of all U.S. dollars in existence are not on printed bills. They're like some number in some bank database. And the U.S. government, the Federal Reserve, more or less controls that number, and they continue to print more, and you can see how the US dollar has degraded in purchasing power over the last 100 years. And my argument there is that Bitcoin is actually decentralized, everything is not. And so you have all of the incumbent risks of centralization, including possibility of confiscation, dilution via inflation, or or even confiscation via some centralized party. This has happened in a lot of these cases. So, you have to think very carefully about what it is that you're investing in. My argument was that Bitcoin is the best one because it has those two very particular properties that no other coin has, and that's what makes it valuable. Now, do other coins have zero value as a result? I don't think so. They probably have some value. But the main use case, in my opinion, and I think economically this is the thing that interests most people sort of instinctively, is that it's a store of value. It's not going to degrade. There's a fixed supply and increasing demand. That means it's going to go up in value or at least stay the same. Whereas with a lot of these other ones, there's a massive downside because there's a centralized party. If the centralized party screws up in some way, then you're screwed as well. Now, it might work out. The centralized party might make good decisions, et cetera, et cetera. But that's not materially different than what fiat currencies can already do.
Sure. Okay, Jimmy. So, what are we at for Bitcoin? Roughly a $100 billion market cap or whatever it is. What is, in your opinion, I mean, is it fair to say that you think over the long term, $1 trillion market cap for Bitcoin alone is fair? And do you see it going beyond that?
Well, I think long term, trillion is definitely reachable. It's a matter of just sort of demand increasing. And that takes time. And time is sort of an underrated attribute for sort of investing purposes and things like that. The longer you've lasted, the longer you're going to last. Again, Lindy effect. And Bitcoin has lasted 9 years. There are people that won't come in until Bitcoin's lasted like 20 years, right? Like at that point, they might be like, okay, well, it's been around 20 years. There's probably a good chance that it'll last another 20. And that's enough for me to store my value there. And that's the sort of thing that only time can give you. Other technological advances, they might be nice. I have suspect that you don't really need them quite as much as everyone thinks. The big thing that you need is security, and a clear decentralized system where a single party doesn't control everything.
Now, I'll just ask you this last question. Is it a bad thing for marketing that Bitcoin, went through that time of very high fees? And then obviously it came down largely, which is a very good thing. But in the time when it was dealing with those high fees and people were having to go elsewhere and companies were saying, hey, we're not going to use Bitcoin, we'll take something else because the fees are too high. And it actually fueled demand for other cryptos. Is that something negative for Bitcoin? And what are your thoughts on that going forward? And you're saying it's a store of value, but when we were first pitched Bitcoin, years ago, it was also supposed to be this very, very inexpensive way to transact.
Yeah, I mean, let me ask you a question. Do you own any gold?
I do.
Okay, do you use the gold to go buy something? Like, do you shave off a little bit of gold and go pay for gum or something like that?
Never.
Okay, all right. Well, then that's kind of how I view Bitcoin. Is that and why don't you do that? Tell me why you don't do that.
Well, it's not a good form of transacting. No, and I agree with you, Jimmy. So, but I guess the investment thesis has somewhat changed over time, and you're fully okay with it being a store of value, and that's fine. I am not arguing with you about that. But
I'm just making my point that there's an economics law called Gresham's law, which says that if you have good money and bad money, people will spend the bad money first, right? Like if you're in Venezuela right now and you have the equivalent amount in bolivars and dollars, you are going to spend your bolivars first. Why? Because it's inflating away. And that's how I see, with Bitcoin versus the US dollar. I will pay for anything with my credit card, which is really not even dollars. It's like debt that's issued to me, rather than Bitcoin, because that's a lot. The Bitcoin's the better money. Why would I spend the good money when I have lots of bad money? So in a sense, I think people have woken up to this fact. Like you can go buy something on Expedia or Overstock or something like that. But the minute they do, they find out like a year later or 5 years later that they spent like way more than they needed to. If they had just spent US dollars instead, they would have been way, way better off than having spent Bitcoin. So for that reason alone, I don't see it as a medium of exchange or like sort of instant settlement kind of instrument. I mean, it certainly can be used like that, don't get me wrong, and the Lightning Network holds a lot of promise in that regard. I just don't, I personally wouldn't use it for that sort of purpose, and I don't think a lot of other people would either.
Yeah, no, I definitely see the validity in that. All right. Well, and I guess I might cut this out, but I just ask you, run it by you, Jimmy. Oil, for instance, is used in cars, and there's value in a barrel of oil. But if we just only started to use oil for the fact that it stores our wealth, that would be, and then people stopped using it for their cars, for instance, wouldn't the fundamental value of oil go away, and will people still want to use it as a store of value?
I don't know if people really use oil as a store of value per se. As far as I can say.
No. I know that. But, just from but does it lose its fundamental value, and does that deteriorate it as something that is a storage of value?
Yeah, that's a very deep question, and I do have an answer, but it's unfortunately kind of a long soliloquy into why store of value itself is valuable and like the history of currency and things like that. Let's just say that the actual thing that can store value without providing any functional thing like rhinestones or wampums or things like that, that still has value. Like even being a collectible or something like that. that's okay, right? Like, what fundamental value does like a Mickey Mantle rookie card have? Not much, but it still has value, right? Like and that's the idea is that you
Sure.
can have something that stores value and it be valuable because it stores value.
Right. Yep. And I see the validity in that point. Jimmy, if people want to learn more about what you're doing and your content you're putting out, where could they go and what can they expect to find?
They can go to my Twitter at Jimmy Song. I also have a YouTube channel, Off Chain with Jimmy Song. I also have a GitHub at Jimmy Song, and yeah, I have a programming blockchain seminar. If you're a developer and want to learn about this very lucrative field, blockchain and Bitcoin development, you can take my seminar. It's a 2-day seminar, and the next one's in San Francisco in 2 weeks, less than 2 weeks, and then the one after that is in New York City in about 6 weeks. So, yeah, check out programmingblockchain.com if you're interested in that.
Excellent, Jimmy. Well, thanks for taking the time with us here at Crush the Street.
Thank you.